This is sort of a launching pad into fiscal 27 where we expect, again, tremendous opportunity for large scale machine sales plus the royalty growth. We're going to be reducing the expense structure, getting ever close to profitability. And again, once we get those royalties above our base expenses, we're going to be consistently profitable for the foreseeable future.
All right, welcome back inside our proactive newsroom. And joining me now is Brent Charlton. He's the CEO of EnWave Corp. And Brent, great to see you again. How are you?
I'm well, Steve. Hope you're the same.
Yeah, doing well, doing well. So you've dropped down your third quarter revenue numbers, and your royalties are growing, and there's things happening within the company. Let you take it from there. Where are you seeing things?
Sure. Q3 numbers were far better than the prior 2 quarters this fiscal year, and I think indicative of expectations from ourselves in coming quarters, primarily in regards to royalty growth. We saw royalties grow significantly in Q3, tied to commercial progress by several of our royalty partners who are actually co-manufacturing for large multi-billion-dollar consumer packaged goods companies. We have foresight on further growth moving into fiscal 2027 and expect to generate somewhere in the range of about $3 million in royalties for that fiscal year. We're also concurrently looking at expense reductions in our business. So right now, our expense base is about 4.7 million. We're looking to get that down to about 3.5 million. And I'll be sharing a lot more details publicly on that in the next couple of weeks. So we're hopeful to be in a position by the end of next year where royalties are almost covering our entire expense base, and we become less reliant on our historically lumpy large scale machine transactions, which is what most of our shareholders want to see.
Yeah, you've put in there gross margins improving by about 25%. So it seems like you're already doing what you're talking about.
Yeah, gross margins continue to be strong. We are certainly pricing our machinery appropriately in market, and of course, royalties being close to 100% gross margin help with that blended margin. So we were 25% in the quarter, 30% year to date, and our royalties for the quarter were $536,000. And that's including a accounting adjustment where one of our royalty payers actually overpaid us by 60K last quarter. So on a normalized basis, base royalty should be about 600K per quarter as per our performance in Q3. And as we move forward, we expect that to grow. So hoping to get sort of in the range of like 7 to 8, maybe even $900,000 per quarter by the end of fiscal 2027.
Brent, I noticed also that your adjusted EBITDA loss is really improved. I mean, substantially improved. That's got to be a positive for you as well.
Yeah, on an adjusted EBITDA basis, again, we're still very much beholden to the lumpy large scale transactions, which are, several $1 million in size. And in Q3, we had a fully built large scale machine, which we were able to sell as a repeat sale to an existing royalty partner tied to their success in market. And so if we were to sell one or two or even three large scale machines in a single quarter, it's going to look very good. But then there are quarters like in Q1 and Q2 where we didn't have those transactions transpire and we were heavily reliant upon royalty generation. So as these royalties continue to grow, again, to my point earlier, is we'll have less reliance to be profitable tied to those lumpier transactions that are, based on a lot of conditions that are out of our control in terms of timing.
Yeah. Also, I want to talk about the global scale of the company because a lot of these royalties that you've been talking about are in markets all around the world, and that shows the opportunity, I guess, for the business.
Absolutely. We're seeing, I think, the most growth in the North American marketplace with several snacks and ingredients that are being launched in different verticals, both for human and for pet food. Europe has been another area of growth we've seen in the past 6 months and expect that to continue. And then Asia. I hope to bring some further news to the market tied to repeat purchase orders in Japan in fiscal 27, and also some new deals in other Asian countries. We're dealing with some pretty large companies, so hopeful that we'll be able to talk about that in more detail in forthcoming quarters.
Okay, and lastly, Brent, just overall your message to investors as you lead toward the fourth quarter and then obviously into 2027.
I just stated this is sort of a launching pad into fiscal 27 where we expect, again, tremendous opportunity for large scale machine sales plus the royalty growth. We're going to be reducing the expense structure, getting ever close to profitability. And again, once we get those royalties above our base expenses, we're going to be consistently profitable for the foreseeable future, which again is what investors want to see sooner rather than later.
Absolutely. Brent, thanks so much. Really good talk to you, and we'll talk soon, okay?
Pleasure, Steve. Thanks.
All right, Brent Charlton, CEO of EnWave Corp.